Hey, good morning everybody. It's another daily market report brought to you by Mike Bjork. Today is Tuesday, August 17th, and we got a lot of news going on today. So let's go ahead and take a look here. We'll start off with the producer price index, or otherwise PPI. It actually was up a little bit this last month at 0.2% versus the prior month of minus 0.5%. The core, when you take out the food and energy, comes to 0.3%, so it actually jumped up a little bit more when it was prior month was 0.1%. So a little bit higher PPI. Something you want to keep an eye on, but it's not the most important thing because on the wholesale level, they don't always pass out those costs onto the consumer. So that's why there's not as much emphasis on the producer price index versus the CPI or PCE. And so let's start. Next item of interest here is actually housing starts. Housing starts actually went up a little bit, but it didn't meet the expectations of 555. It was up for 546. They did revise last month's prior to 537, so they did revise it lower. So we had a few months there after the tax credits went away where they dipped, and then now it looked like it went up a little bit. Next item of interest here, kind of a surprise, the industrial production went up 1%. Prior month was minus 0.1%, but something to kind of watch out for. It looks like it is a kind of a seasonal type of thing where it was kind of led by the auto industry, and this is typically when they do increase their production. So something to kind of keep an eye on. It might be more skewed this month, so we'll definitely want to watch it next month to see if it's something that looks like it could continue as a trend, or again, is it just a 1 month thing. So as a result of all this news, it's been great for the stock market. It's up quite a bit. The Dow, I believe, was well over 100 today. And yesterday, the Fed started buying the Treasury bonds as they said they would. They bought in about $2.55 billion. I believe through the 13th of September, they're going to buy approximately about $18 billion with Treasury bonds to kind of create the liquidity. And they're getting that money from the maturing of the mortgage-backed securities that came out. So as a result of the bond market, we had a little bit of a dip yesterday. We started the day off at 12 basis points lower, and currently we're down about 9 basis points. Something to watch out for, we have kind of a reading here about around the 102.50. If we reach the 102.50 level, we're going to be testing that. We already are testing it because we're currently about 102.53. We're going to need to be cautious because it could drop quite a long ways down to the 102 level here. And right now, as we stand, rates have dropped or have increased a little bit from yesterday's numbers. So if anything else changes, I'll definitely let you know, but let's keep an eye on this 102.50 level here, make sure it stays above that. And if anything else changes, I'll keep you up to date. You guys have a great day.